Today, I want to talk about how Antara is finally closing out of their short positions. I want to explain whether this means we've won or whether it means something else entirely. And I also want to talk about everything that's currently lining up for the AMC squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, as Crystal tweeted, he said Antara has finally closed out of their short positions, or more specifically their put options. Now we know that Antara was holding tons of AMC shares and APE units as well. They had their total return swaps and their call options and their put options too. Antara haven't yet closed out of these total return swaps, but the total number of swaps actually isn't too huge, but what they have done is close out of all of their puts. We can see that every single one of their put options, or maybe it's just most of their put options, have currently been closed over the last few days. Now you may be saying, Tom, what does it mean when a fund closes out of their put positions? And does this mean that all other hedge funds are also closing out of their puts and their shorts as well? Well, let's break those two questions down bit by bit. As Frank's Place tweeted, he said you sell puts when you expect the price to rise. That basically means that Antara does not think that AMC is going down anymore, at least in the short term, and therefore they're closing out of their put options to benefit from a price increase. Antara is clearly trying to benefit from the next AMC run up, which could potentially be the AMC squeeze, although that's not guaranteed. Antara may potentially reopen their put positions at a later date when AMC has experienced its next run up, which could or could not cause the squeeze. But one thing is clear is that right now, at least Antara individually does not think that AMC is going down anymore and is likely to have another run up. They haven't closed out of their full position as they're still holding the AMC and APE shares, they're still holding the call options, and they're still holding those total return swaps, just not the puts. Now this obviously doesn't mean that other hedge funds are necessarily closing their puts or closing their shorts as well, and I specifically imagine that those synthetic short sellers have likely not closed out of their shorts yet either, otherwise we would have seen a squeeze. However, obviously if they are closing out of put options, they may increase their position in AMC and APE shares, buying shares in the open market, potentially pushing the price up, again causing the next AMC run. And obviously if that causes AMC to run and some of these shorts are caught off guard with low maintenance margin, it could absolutely cause them to be liquidated, actually causing the real squeeze. Something I find very interesting is that Stash, a trading platform, is actually warning clients that AMC is currently experiencing or is about to experience an AMC squeeze. Although the specific advice they give is very weird indeed, but let me read it out to you. They've said we're reaching out with an update on the AMC stock that's currently in your portfolio. They've said recent news reports have acknowledged that AMC may be going through a short squeeze, which means this stock is highly volatile and could cause potential issues for investors. And they've said typically we don't recommend placing more than 2% of your overall portfolio into one stock and always advise that you follow the Stash way as you review your investments. So they've said that AMC is currently squeezing or is just about to squeeze, but this could cause potential issues. You could actually make too much money and therefore you should probably sell some of your shares so that you don't make too much cash. Maybe Stash are trying to help out with your next year's tax liabilities by trying to convince you to sell some of your AMC shares so that you don't make too much money and don't have to pay too much tax. Obviously this advice is very, very weird, warning you that a short squeeze when you're actually holding the stock, aka you stand to benefit massively, could cause potential issues. But you can't get around the fact that it's quite an interesting email to receive, and it definitely gave me a few laughs when reading it. Now I also wanted to talk about how the shorts are currently unable, or at least unwilling, to roll their FTDs this time around, unlike every time before. Guys, be sure to join me over on Moomoo, the sponsor of today's video, by signing up using the link in the description below. You can currently get up to a whopping 17 free stocks when you sign up with Moomoo. They've got entirely commission-free trading, free level 2 market data. Moomoo is also very easy to use and they've got tons of technical indicators and advanced charting tools. And with Moomoo they've also got free 24/7 customer support, and you can also trade around the clock with full extended hours. As Orangutan tweeted, he said this question answered is critical. He said with short interest at 26%, a new all-time high, and a permanent spot on the threshold list, something in the game has changed. Obviously, AMC has now been on this threshold list for 18 days straight. This is actually the first time that AMC has been on the threshold list in almost 2 years now, and the first ever time in history that it's been there for longer than 13 days. And at that same time, it also shows that AMC currently has no sign of leaving this threshold list, basically meaning these trading platforms and these market makers and these broker dealers have no intention or cannot possibly close out of their failed to delivers. And at the same time, we're also seeing some crazy new all-time highs in the actual underlying data. We're now seeing at least 25% of the float actually shorted and at least 38% of the float currently on loan. Now, obviously, this is just the legally reported data, so it's obviously not inclusive of all of those synthetics, but what it is a new all-time high for the legally reported data. Right now we're seeing 200 million shares actually on loan. Obviously with this massive cost to borrow fee, well, on Ortex right now it says 250%, but we know that it's been as high as 1,000% per year. So right now we're seeing new all-time highs in the legally reported data, and we're seeing AMC being on the threshold securities list for not just the first time in almost 2 years, but the first ever time it's been there for longer than 13 days. As Orangutan said, clearly something in the game has changed because these hedge funds and market makers and broker dealers are unable or at least unwilling to actually close those failed to delivers. Whether they can no longer roll them in the options chain due to new regulations, or whether it's due to the disappearance of those FTX synthetics due to the FTX bankruptcy, or whether it's something else entirely, I don't know. But obviously something has changed because we would typically see AMC disappearing from this threshold securities list very, very quickly. We'd see tons of shares that were available to borrow, and we'd see very few FTDs and an almost non-existent borrow rate. So clearly everything is currently lining up for the next AMC price run up, and that's also being supported by the fact that Antara have sold off their put options. They've sold off their puts but kept all their shares and kept all their calls, so clearly plan to benefit from the next upcoming AMC price rise. And maybe it's because these shorts are scared that AMC is going to do the exact same thing that RKDA has just done after their reverse stock split. As Jonathan tweeted, he said RKDA has just performed a 1 for 40 reverse stock split, and right now the stock is currently up 2,500%. That 2,500% is over the last month, but today alone it was actually up 3,230%. Now obviously I'm sure a chunk of this giant price rise is due to the reverse split, but obviously this stock has also experienced a potential positive benefit from that reverse split and has increased further than it would have been expected to. For example, the price of AMC should be multiplied by 10 during the reverse split and then divided by 3 for the 8 conversion. But obviously if there's tons of other day traders and other investors that jump into AMC after seeing the price spike, it may increase significantly higher than that. For example, instead of seeing the price multiplied by 10 and then divide by 3 for the reverse split and conversion, we may see the price multiplied by 10 and then multiplied by 2 after that. And obviously a giant price rise like that would potentially cause the squeeze and obviously end up with these shorts being liquidated. And this also seems to be happening at a very interesting time. We've obviously just seen this article or this headline from Bloomberg. The Bank of England are currently saying that a digital pound could protect consumers during bank runs. We've obviously seen the US also talking about a CBDC and the implementation of such CBDC as well. Basically the UK and the US is saying that a digital pound or a digital dollar could protect consumers like you and I during bank runs. But that basically means that both the US and the UK is actually expecting some of these major institutions to experience bank runs over the next few weeks or next few months. Now we know that Credit Suisse has already experienced a bank run, but obviously Credit Suisse is a Swiss bank, not specifically a UK or US bank. So therefore the UK and the US is also potentially expecting other major institutions such as UK and US banks to also be experiencing bank runs as well. And that's likely because many of these major institutions will be caught up in the market crash and AMC squeeze that will end up happening at the same time. Basically saying that during the AMC squeeze and market crash, we could very much experience bank runs, potential need for bail-ins, and obviously a potential digital currency. This is obviously very worrying, but it's also good to know that we are currently hedged on a market crash by holding those AMC shares, which would likely squeeze during that market crash. But I do think it's very interesting that now is the time that Antara have decided to sell off their put options just before the AMC reverse split and conversion. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.